All right, we're starting right off with the market wrap. Let's take a look at how markets opened this morning. Asian markets saw gains as investors bet the Federal Reserve will soon end its hiking cycle. After many recent data reports indicating that the world's largest economy is faltering, investors have added to wagers the Fed is done with rate rises. Now, the Nikkei 225 stock average in Japan reached a new high and broke a 33-year record. With strong corporate results and a weaker yen, the Nikkei 225 has risen about 30% so far this year, pushing it beyond its intraday top from June. On Friday, the Nikkei 225 marked its longest weekly winning run since June. Hong Kong and mainland Chinese equities also gained early on Monday. After the S&P 500 closed over 4,500 to mark the third consecutive week of gains last week, US futures were little changed. Wall Street stocks held steady last week after a $2.7 trillion gain in November on bets the Fed will end its hiking cycle to avert a recession. Now, the profit recession in the S&P 500 index is ending as the earnings season concludes. With almost 90% of S&P 500 companies having reported results, it is safe to assume that the three-quarter run of profit reductions has ended. Profits are up 4% year over year. Now, bolstering bets on the Fed's policy path weighed on the dollar and bonds. The dollar fell to its lowest level in 4 months on speculation that the currency may have already peaked. Year-to-date gains in the dollar index tracked by Bloomberg have been wiped out, while losses in bond return indices tracked by Bloomberg have been reversed. Now, the Treasury market's rebound faces a bond auction to determine if investors believe the 2023 sell-off is finished. November marks bond market's greatest gain since March, when a financial crisis threatened the entire economy.